Joining me now is Vicky Pryce, who is the Chief Economic Advisor at the Centre for Economics and Business Research in the UK. Welcome, Vicky. Good to see you again. These EU sanctions, these new ones, target coal. They don't yet target oil and gas. So how much of a blow will they end up being to the Russian economy?
Coal matters, of course, but it really will be gas in particular that's going to be the most important one to cut off, because, of course, Europe depends so heavily on Russian gas. But oil will matter as well, because we know that I think Russia gets, in terms of revenues, 4 times as much from its exports of oil as it does from gas. It just so happens that the way in which the gas industry works in Europe, there is huge dependence on Russian gas right now. And that is what is worrying places like Germany in particular.
Can we expect the US to follow suit here with another round of sanctions against Russia?
Well, the first thing, of course, to bear in mind is that the US has already said it's not going to be importing any Russian oil anyway, so it's already done that. But yes, I think what is happening here in Europe is, in a way, sort of moving closer to what the US has been calling for in any case, which is a tightening of the sanctions that we already have. We have one problem, of course, which is that quite a lot of the banks themselves, of course, are still able to operate. So a number of banks can receive and exchange you receive payments and therefore act as paying conduits for quite a lot of the areas that Europe wants to buy right now. So we haven't really seen the overwhelming sort of stopping of Russian banks operating. And the reason for that is that Europe really needs the transfers to happen for its energy needs. I think the real sanctions, or rather the impact of the sanctions, will become real when one has also adding to it, one adds to it the any cuts in terms of imports of oil and gas. And I think that is where Europe is slowly moving towards. But for the moment, it would be very, very painful for it.
Slow progress at the moment, and what we've seen is the ruble essentially returning to almost its pre-war value after the crash. Would that indicate then that these sanctions haven't been that effective to date?
Well, what the Russians have done, of course, is they've introduced a lot of capital controls, so it's impossible to sort of sell the ruble and do any transactions that way. So basically, one is stuck. It's just impossible to move out of the ruble right now, which really means, therefore, that the ruble is strengthening as a result. Also, they've raised interest rates to 20%. There were 9% before, it's now 20%. Up to a point, of course, that has helped with the inflation position in Russia. I mean, inflation has been rising quite significantly, partly because of a weak ruble, but also because of a number of restrictions that had been in terms of goods and services that perhaps the Russians were relying on before. So prices have been going up more generally. We're moving to double-digit inflation in Russia, so increasing interest rates had helped, and also the ruble going up has helped. So yes, I think from the West it would look like perhaps the sanctions haven't really worked, but the reality is that they have had to impose quite a lot of restrictions on their own populations and their own banking system in order for that to happen, and that, of course, is a problem in terms of growth.
Briefly, if you would, Vicky, I mean, that's the kind of short-term outlook, but in terms of the long-term prospects for the Russian economy, based on the kind of economic isolation right now, how does it look?
Well, if the Western companies, which they've already been doing it, of course, withdraw their commitment to Russia, which some countries have done it more than others. I mean, we hear that perhaps, French companies are still there operating, a number of them, and that's a bit of an issue. So it's not being widespread in terms of moving out. But the real issue is the longer term. Some of the sanctions that we've heard about today, of course, go down to the heart of the manufacturing sector and also technology transfers. If those things don't happen in the future, and if, of course, a lot of the investment that was going on before just doesn't materialize in years to come, then obviously Russia will move to a slower growth environment. And of course, for the moment, it's relying on oil and gas to pay for its military operations, and that's going to be a real drain on growth for some time to come.